Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're looking at cryptocurrencies. It should come as no surprise that governments the world over are not enthusiastic about having a grassroots competitor to official currency of the nation. Since most of the world exists in the realm of fiat currencies, the most practical way into the world of cryptocurrencies is through a crypto exchange. Bitcoin is the largest share of the market, comprising 48.1% of the total crypto market, followed by Ethereum at 19.5%, Tether at 7.8%, BNB at 3.6%, and USD Coin at 2.6%. The hundreds of other coins out there are sub 1% market share. If financial regulators decided to attack the crypto community, it would seem like an impossible task. There are literally thousands of discrete currencies out there. It's a little bit like a game of whack-a-mole. Target one coin and another will pop up somewhere else. Is it a coincidence that the Securities and Exchange Commission is targeting crypto exchanges? Well, we don't know for sure, but today's show is going to zero in on that question and postulate why there seems to be a war on crypto from regulators. The Securities and Exchange Commission has targeted two of the largest crypto exchanges, Binance and Coinbase. Binance has 62.5% market share and Coinbase has 5.4% market share. The actions against Binance and its founder, Zhao, alleges that Binance artificially inflated its trading volumes, that they diverted customer funds, and that they failed to restrict U.S. customers from its platform, and they misled investors about its market surveillance controls. The SEC also claimed that Binance and Zhao, its founder, secretly controlled customers' assets, allowing them to commingle and divert investors' funds as they pleased. Binance created separate U.S. entities as part of an elaborate scheme to evade U.S. federal securities laws. The SEC also alleges against Coinbase that since 2019, Coinbase has been engaging in unregistered securities offerings through its staking-as-a-service program, which allows customers to earn profits from the proof-of-stake mechanisms of certain blockchains and Coinbase's efforts. Through this staking program, Coinbase allegedly pools each type of customer stakeable crypto assets, stakes the pool to perform blockchain transaction validation services, and then provides a portion of the rewards generated from this work to its customers whose assets were part of the pool. It's clear there's a large and growing percentage of the population who have held cryptocurrencies. Globally, it's estimated that 4.8% of the population hold crypto, and in the United States, it's estimated that 21% of American adults have held cryptocurrencies. Now, China banned cryptocurrencies more than a year and a half ago. At the time, it launched its own central bank digital currency. Government doesn't want to call crypto a currency. Legal tender, after all, is the legal tender of the United States or the European Union or whatever jurisdiction we're talking about. If cryptocurrencies are not money, then what are they? Well, the SEC has aimed to classify them as securities. A security is defined by a precedent-setting legal case called the SEC versus Howey, and in that case, the Supreme Court found that something is a security by virtue of being an investment contract. That's, of course, in addition to the language that is contained in the Securities Act of 1933. According to the test, an investment contract exists if, number one, there's an investment of money, number two, in a joint enterprise, number three, with the expectation of a profit, and number four, if that profit is obtained through the efforts of others. Now, I'm not a lawyer, and I'm certainly not a securities lawyer, so I'm not really qualified to comment on the merits of the case on either side, either against Binance or Coinbase. But it's clear the SEC is arguing that securities law applies to both Binance and Coinbase. If they are indeed securities, then securities law would apply. So why is this all happening, and why is it happening now? We don't know for sure, and what I'm about to say is pure speculation. I believe the nature of the action is designed to send a chill over the entire ecosystem of centralized exchanges. These exchanges enable citizens to move funds in and out of cryptocurrencies. If you can close the on-ramps and the off-ramps, you effectively isolate the entire crypto ecosystem. At that point, crypto becomes less and less useful as a means of exchange. If the liquidity is impaired, then so too is the demand for the cryptocurrency. My belief is that they're not making cryptocurrencies illegal, but they're practically making it difficult to use them by making them into securities and subjecting them to securities regulations. It becomes so cumbersome to trade that any benefit would be washed out by the compliance costs associated with legally trading in securities. The second part of the question is why now? After all, crypto's not new. It's been around for many years. The timing could be related to the rollout of government-sponsored digital currency. It might be a so-called 1-2 punch. Stop wasting all the time and risk messing around with those illegal cryptocurrencies. Wouldn't you rather simply use the digital dollar, which is more convenient than Bitcoin, and it's got all the security of a digital currency? Not only that, it's backed by the full weight and credit of the U.S. government. We saw a similar playbook in China. China made it illegal for Chinese banks to trade in Bitcoin back in 2013, and then made it illegal to use or mine cryptocurrencies in 2021. And by 2022, they had rolled out their own central bank digital currency in 23 cities across China. China has been experimenting with digital yuan since 2014. And I believe these steps were a precursor to the introduction of a digital greenback. Stay tuned and we'll see if I'm right about this prediction. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.